Okay, display, there we go. Do this, do that, do this, and that, and I do this, that, and then booyah! There we go. Alrighty. Let's get the ball rolling. Just sent the pick. Ooh, can't wait to see that one. Riley, 1% a week. Got to love it. Alrighty. Jimmy, big brain, what's going on? Random account, 56. Justin, Mexi Bodie. Don't be afraid. I always wonder where people get some of these names. Mux Capital, glad to hear it. Jawa, oh, okay, thank you. Alrighty. So I said hi to everyone. Adrelli, you okay? Yes, I am. You are Portuguese? No, I'm not Portuguese. Watching from Florida, just come across this site. Well, bloody jolly good there, lad. I'm over in the St. Petersburg area. So, depending on where you are, because Florida is a big place. So I have no idea whereabouts in Florida you are. All right. Just take a deep breath. I was working all day down at Mom's AQMS. West Bradenton, holy cow, I was there this afternoon. Oh, well, no, I was Central Bradenton, I think you call it. The new 301 in State Road 70, that area. Paul, wait a minute. Bonjour, allo, salut, konnichiwa. What else we got? Whatever. Anyway. My name is James. This is Dividend Stock Talk. Good evening. Welcome all, young and old, small and tall, blah, blah, blah. All kind of nice, neat, fun stuff. Anyway. Edwin, good evening. Hola. All right, hold on a second. Jawa, how does this stock fit into my broader investment strategy, growth, income, value? Okay, Jawa, this is basically income. Okay, sit tight for a minute. You're new here. I go through each step one at a time. So pretty much you should be able to get a good grasp of what I'm doing relatively quickly. Now be patient, everyone. There are 7 different channels here, which means I have 7 different something. Make sure it is a complete thought, complete sentences. Little words here and there don't really help me out anyway, because if I ask a question and then you answer it, and I come to your answer 5 minutes later, I might not know what you're talking about. All right? So, Andrea, how are you today? Good old Powell and his no news. What is it, 9:30? 9:30, Wednesday. Today's Wednesday, right? Is it Wednesday already? No. Is it? Hold on a second. Here, bring up my calculator. Holy cow, it is Wednesday. Holy shit, Wednesday already. All right. Yeah, Wednesday. Where did it? It just didn't look very good. Some strange reason. NKE. All right, now before I get started, Andrea, just sit tight. Let me go through the disclaimer and all that kind of nice, neat, fun stuff. I haven't done a disclaimer in quite a while. Well, do MS. Listen closely first, because you might want to change your mind in a minute or two. All right? What I am looking for every single week, using nothing but pre-qualified dividend stocks. Now, when I say pre-qualified dividend stocks, a decade is 10 years. So 2 decades is 20 years. Okay, so I only want to look at companies that have options. So let me briefly explain how we got started, how we got here, and then you might understand why it is I'm looking for what I'm looking for. All right? Back in 2008, my 9-year-old daughter jumped up my lap and said, "Daddy, what are you doing? Can you teach me?" Now, ask yourself a question. Considering most adults have a difficult time investing in the stock market successfully, consistently, how am I supposed to teach a 9-year-old something that most adults can't even figure out? Well, it took me a while to come up with a strategy specifically for a 9-year-old little girl. Number 1, it had to be simple. Number 2, it had to be safe. It had to be predictable. it had to be consistent, and then it had to be no way that she could lose. That's the 5 criteria that I was facing when I came up with this trading strategy. So, came up with 5 rules. 5 criteria, 5 rules. You're going to see 5 a lot. 5 rules. Rule number 1, never buy something you don't understand and you don't want to hold on to long term. That's the initial sentiment going in. Never buy something you don't understand and you don't want to hold on to. That's it. If it doesn't make sense, don't buy it. If you don't want to hold on to it for the rest of your life, don't buy it. Okay? I check every single week just to see how many companies are out there, because they add new companies every single week. So this week, 10,066 companies. 10,066 different companies. Now that's not ETFs. That's not mutual funds. That's just corporations. So you add the mutual funds, the ETFs, and all the other kind of nice, and the indexes, all the other kind of stuff you can throw in there. Yeah, that's a lot to choose from. So how do you choose? So, number 1, never buy something you don't understand. Number 2, make sure never sell at a loss. Number 3, make sure the company is consistently profitable for at least 2 decades. Number 4, weekly options only. Number 5, make sure all the numbers work. Other than that, it just wouldn't make any sense. Demetria, please, just once. Okay, I do read each and every individual question, but remember there's 7 different screens, which means there's a whole bunch of different conversations going at once. I will answer every question. Okay, that being said, let's start. Wait a minute. Did I go through all of them? I think I did. Simple, safe, predictable, consistent. Okay, then never buy something you don't understand. Never sell at a loss. Make sure the company's profitable. Weekly options. Make sure the numbers work. Okay, yeah, I did everything. What about NVO? Might fit those criteria. Not sure, though. Okay, B. Berry. Okay, I just got on. Okay, cool beans, Demetria. So, B. Berry, I've never heard of NVO. Wait a minute. I think I may have heard of it. But sit tight. We'll take a look at NVO in a little bit. We got 3 we're going to look at first. Nike's going to be first, and then we're going to take a look at AQMS for some strange reason. All right, so that being said, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Uh-oh. I got a newbie over here, and I can tell just by what they're asking for. So sit tight. We'll take a look at that, and I'll tell you why I don't like it. All right. Let's get started. Now, I'm going to show you a couple of trading strategies. Well, is figure out which companies you like and which companies you want to invest in. Edwin, low risk, long-term holds. Okay, Edwin, you're relatively new here. Okay, sit tight. Watch what I'm going to do for a little bit. Just sit tight. Watch a few trades first as I explain as we progress forward, and then you might get an idea of what we're trying to do. Now remember, it was created for a 9-year-old. And as a matter of fact, we're going to do that very first thing. Very first thing. Let's do it. That ain't it. That ain't it. Where is it? All right, very first thing we're going to do is we're going to take a look at the little, got to go over to YouTube first. There it is, all the social media sites. I'm going to go over to YouTube, and then we're going to introduce you to how it all got started. Come on, what's taking so long? Wow. All right, there we go. All right, both of those are running. All right, videos. There we go. The oldest videos I got. Goes all the way down. Oh, there's the little princess right there. Uh-oh. Uh-oh. Uh-oh.
Cycle thingy, which my dad didn't let me help.
Try it one more time.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading.
All right, this is me 15 years ago.
What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends.
Yay! All right. It does make me laugh. I have to admit, it makes me laugh watching that video. I mean, we did that like 15 years ago. How else are you going to keep a 9-year-old entertained? So we did a lot of fun, crazy stuff. I tried to make it fun for her. I tried to make it exciting because she was 9, okay? Anyway, that being said, let's get out of there. So you met my 9-year-old daughter. It had to be simple, safe, predictable, consistent, no way for her to lose. So all that being said, it had to be a simple strategy. So the covered call is a simple strategy. All right, Mux Capital, there you go. Russian Alexandrovich Kagdala Jawa, how does this stock fit into my broader investment? Okay, Jawa, sit tight, watch what happens, ask questions, and see if it makes sense. What else we got? Ponce de la Jeune, what can I trade? You can trade almost anything. I got some Pokemon cards to trade. Cool beans. All right. Dude Wars. If you're caught streaming without insurance, wait a minute. If you're caught streaming without insurance, you can face various penalties which vary from state to state. Number of previous offenses range from fines to jail time. Dude Wars, I have no idea what that means. Muni Mike, you got a 9-year-old? No. My 9-year-old is now going to be 26 next month. I said when she was 9 years old. Okay, that was like 15 years ago. So I've been doing this strategy for about 15 years. My first 5 or 6 years didn't really pan out very well. You know, some things were great, some things weren't so great. Okay, so that being that, let's get out of this and let's go take a look at what it is we're doing. Yeah, the disclaimer. Okay, here comes the disclaimer. You ready? I am basically nobody. I don't have any college degrees, okay? Don't have any further learning. I didn't work on Wall Street, okay? I took the path less traveled. I got out of high school. I went into the service, did a little bit of time there, got out of the service, got into an apprenticeship creating artwork for museums and public aquariums. From there, I opened up my own manufacturing company. Yes, I was a CEO for a while with about 26 employees. It wasn't the biggest thing in the world, but yeah, you know what? It was fun. It was interesting. From there, I bounced around all over the place, and I ended up here. Because at some point in time, and how it happened to me, okay, so during my phase, you know, the CEO and all the employees, well, at that time, I made so much money, I couldn't figure out what to do with it all. So I did what every normal person would have done. You know, bought all the cars, bought the houses, the boats, the RVs, all that kind of stuff. I ended up having a nice portfolio of real estate, and then I had a nice portfolio of stocks, because I tried everything to invest. Well, the real estate was very labor intensive, and I had to deal with renters. It didn't go out very well. Needless to say, my real estate entrepreneurial didn't work out very well. But my other adventures, you know, classic cars, art, stamps, coins, all that kind of weird stuff. Nothing was as easy as the stock market, because I got no brick and mortar store, no overhead, no employees, no inventory, no insurance, no tax, no employment taxes. Is that right? No unemployment taxes. There's a lot of things you don't have to do when you make investing your full-time endeavor. Yeah, that's about right. Anyway, let's get out of that. So I had to figure out what to do with the money. So what do you do with it? Okay, well, you make investments. Now, what I'm doing nowadays is making a cash producing assets out of the stocks. So I take a look at a good company that's been around for a while, that is consistently profitable, and then I see what the numbers look like using a trading strategy that's very simple. Okay, and it's very safe. It is so safe, as a matter of fact, you can use that trading strategy in your IRA. And there's a lot of IRAs, there's a lot of trading strategy you cannot do in your IRA. Oh, I got 2 more nights of this. Tonight and then tomorrow night, then I got a 2-day weekend. Great. I don't think my voice is going to hold out much longer. All right, Mikkel. Hold that thought. Okay. Don't. Bum. All right. Buy, sell, buy. James, have you seen jar squatters? Nope. What's your opinion on Bitcoin? Is IRR a good measure in return on the stock or preferable for real estate? I'm not quite sure what IRR is. Now, through my adult life, I've been in a lot of different industries, a lot of them. They all have their own acronyms, and they all have their own 3-letter and 2-letter agencies, or whatever you want to call them. So IRR, I have no idea what that means. If you can explain it to me, I might be able to help you out a little bit. So let's get moving. First thing we'll do is looking at Nike. So let's see how many stocks can we look at tonight. So first one, Nike. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, sideways, down, up. Now, I like to keep things simple. Anytime I look at a stock, it takes me 3 to 4 seconds to size up whether or not I want more information. 5 things I want. High, low, where was it, where is it, and what direction is it going? Well, that should take you 3 to 4 seconds. Once I figure out, okay, it's not an extreme high, it's not an extreme low, somewhere in the middle. What's going on here? It's going to be a no, so I'm not even going to go into the numbers. Now, the reason why I'm saying it's a no, I don't know if you've noticed it, and just a pointer, in case you, for all you new here, this screen here, okay, if you didn't know, the screen here is broadcasting live at this moment in time on YouTube. So more than likely, you're not going to be able to see these tiny numbers on your phone or your iPad or whatever you're watching on. If you're on your phone, most likely you're not going to be able to see these tiny numbers. That is why the whole screen, just the screen without me, is being live broadcast on YouTube. Okay, so if you can go into the other room, I'll give you a minute, go in the other room, turn on the big screen TV, pull up YouTube, and go to the 10-Minute Trader and live videos. All right. That should be good enough. I don't know. Anyway. All right, so Nike. Now, the reason why I'm saying no to Nike today, well, I like Nike. I really do. But just look where the low is right here in April. The low here in April, 52. Well, look where the high is today. Why from 52 to 65? Okay, 52 to 62 is $10. To 65, that's $13. So $13 jump on a $50 stock. That's about 20% from here to here. 20%. So more than likely there's going to be profit taking, and I don't ever buy at the high because it's at the high at this moment in time of the 30-day period. See, I invest for 5 to 10 days. That's it. I like to buy on a Monday, and I like to be out by Friday. Okay, I'll roll into the next week if it consistently being profitable, and we'll get into that in a little bit. But think about it. A couple of questions you need to ask yourself. Do you like Nike? Well, Nike is at a high at the moment, and I don't ever buy at the high because my humble opinion is supposed to buy low and sell high, not buy high and wait for it to go higher. That just doesn't work. Well, not for me anyway. Okay, that's not something I like to do. Now, some people do like to do it. I don't. like the live. Cool beans. Bye-bye. All right. You have a nice night. Thanks for stopping by. All right. Where are we? Mike, forgot. Monthly only. No, Mike, no. All right. CHCH. Okay, hold on. All right. Masonic Ho. Edwin. Thank you, Edwin. Andre, we just looked at, Andrea, we just looked at Nike. So Edwin wants to look at AQMS. Hold that thought. Got a couple of questions over here. Cecil wants to take a look at Paramount. What's the best asset over the past 17 years? Well, Mike, how are you today? I missed some of these questions. Oh, okay, so Mikel wants to know my opinion of Bitcoin. All right, my opinion of Bitcoin and all other cryptocurrency. Love the idea. I believe the U.S. market might be one of the last markets that are finally coming to the, getting on board with Bitcoin and getting on board with cryptocurrency. Because it's a great idea. Giving the people the money and getting government and bankers out of it. So how can we make profits on cryptocurrency? Now, I'm going to admit something. You ready? I did not know that there are weekly options available on cryptocurrency. I didn't know that until last night. Now, I didn't verify the information. One of the people in the audience told me last night that cryptocurrency does have weekly options. Well, that's a whole different ballgame. However, there is a minor flaw with it. Because just with weekly options, okay, great. Well, what do you call it? Futures have weekly options. But they have no consistency. Okay? They have nothing backing it up. Well, at least most of the companies we're looking at have a product that they can buy and sell. Well, Nike has products. Well, what kind of product does Bitcoin have? Well, it doesn't produce anything. So where's the appeal? And it doesn't have a dividend. So how do we know when it moves systematically? Okay, the only way you're going to make money on cryptocurrency, as far as I know, well, they don't produce anything. So how are you going to tell when they move? Now, companies got to they got to inform you, what's going on in the company, whether they're profitable or not, through quarterly reports and annual reports. Well, cryptocurrency doesn't have annual reports. Seasonal pattern. I'll give you, for instance, for seasonal pattern. Weight Watchers stock goes up the beginning of the year, every year, like clockwork. Okay, goes up every year like clockwork. Certain stocks go up in the fourth quarter every year. Certain stocks go down the first quarter every year. Consistently to a point where you can plan making trades because you know what the stock is going to do. Well, that's why I like dividend stocks, because a dividend stock, just before they pay out the dividend, has a tendency to increase in value. So by knowing that information, I now have a little bit of information that tips the scale in my favor, so to speak. So if I know the stock is going to move up at a certain time, hold on, we're going to need a little bit of viewing material. Okay, picture. Every picture tells a story, don't it? Now, I asked last night, every picture tells a story, don't it? Okay, by Rod Stewart. I believe it's somewhere in the 70s. Does anybody know exactly what year Rod Stewart came up? Without looking it up. I'm talking about retaining information in your head without looking it up, without Googling the information. All right. This is a calendar. All these little green dots represents every single company that has a dividend. And the green dot represents when they're paying out their dividend. Okay, so if a dividend stock increases just before they pay the dividend, that little bit of information allows me to make a trade just before the stock moves. Predictability. Remember I said predictable, consistent? Well, the reason why I said weekly options, because there's a different week every single week. That's weird, isn't it? It's a different week every single week. Every single 7 days is another week, you know? This week, next, I think this week is week number 23. Okay, because there's 52 weeks in the year, and I believe we're in week 23. Yeah, because if we're in week 23, 24, 25, 26, okay? And then that's half the year. Okay, so in 3 weeks, that's half the year. We had 3 weeks until the third quarter starts. That's kind of exciting. All right, let's get out of that. Here we go. Here we go. All right, so it was no for Nike. Terribly sorry. All right. Edwin wanted to take a look at AQMS. Now, Edwin, now you're relatively new here because I'm pretty good with names. When I see a name over and over again, it's like, okay. But Edwin, I've never seen your name before, so my assumption is this is your first time here. Or this is the first time you're here and then you mention something. Okay? So, Edwin wants to take a look at AQMS. Now, Edwin, I've never heard of it. AQMS. Now, I've been doing this long enough. I know almost all the companies that have 2 decades of consistent profitability, and this one is a double hell no. Now, there's a possibility that an $8 stock could have 2 decades of increased profits, but it's at 91 cents. And it's a monthly. 20 June, 18 July, 17 October. Those are months of the year. Sorry, Edwin. There's a reason why I didn't know it. Okay, because there's 10,066 different companies in the stock market. I only look at about 300. But for the most part, I can basically see the ticker symbol and know about 300 different companies because I've been doing it long enough, and those companies are consistently profitable because they fit. AQMS does not. So that's why I don't know who it is. Arnold, what's happening? All right, so Edwin, there you go. It's a no. Cajun wants to take a look at Cardinal Health. KCAL, no. Okay, now, I said 3 to 4 seconds. 3 to 4 seconds. High, low, was, is. Look at the motion. Straight up. Now, that might be good last July or last August, but not now. I don't like buying at the high. Now, don't get me wrong, Cardinal Health might be a great company, but why would I buy after all the profit has already been made? So now that it's here, okay, it was at $90 a year ago. Now it's at $150. That is a 50% increase in 1 year. So a 50% increase in 1 year, well, more than likely, they're going to have some profit taking. Look at it all. Look at all that space from here to there. See, we got no to CAH. Disclaimer, huh? Okay. Tom, good evening. 007, good evening. What else do we have here? Just sent the pic. I'm interesting. Take a look at that Porsche. You know, I like Porsches too, but I like the old Porsches. Ones that have style, ones that have lines, ones that have class. The new Porsches, well, a lot of them look like Pontiacs or Volvos or Audis. Like the cars nowadays, they kind of all look the same. All righty. What else we got? All right. Steve Shannon. Good evening there, Mr. Steve. Krista, what is a covered call? Uh-oh. Newbie alert. Krista, here we go. You ready, Krista? Krista, a covered call, basically, covered means, don't worry about it, I got you covered. Something like that. A covered call is when you buy a stock. You buy something. And then you sell it to someone else using a stock option called either call option or a put option, an option contract. Basically, are allowing someone to buy it from you at a certain price by a certain date somewhere in the future. So a certain price, agreed upon price, by a certain date, agreed upon date. So if I buy this, right? I own it, I can do what I want. I sell somebody the rights to buy it from me at a certain price by a certain date. All right, so we're doing stock options. So we get the put options over here, call options over here, calls and puts, however you want to look at them, whatever you want to call them. They are, in essence, in fact, they are insurance policies. Isn't that weird? You think they're stock options. No, they're insurance policies. Let me explain. When the brilliant pioneer came up with the idea of a stock option, it was basically designed so that rich people didn't lose any money. So let's say hypothetically, you owned Cardinal Health, CAH. Now your Cardinal Health, let's say hypothetically, you owned Cardinal Health. You want to insure your stocks against the loss. Well, that's kind of weird. You can insure your stocks against the loss. It's an insurance policy. Let me explain how it works. So if it's at 160, I can go in and buy a $160 put right here. Okay? I'd have to pay $5.50 per share for that put. Well, here's the thing. Now, if that stock drops, okay, you think you're losing money? Think I'm losing money? No, because if the stock drops, the put increases in value in case it goes down. That's what they were designed for. They were designed to hedge against losses. Okay, and that's what they were designed for. So, a stock option is a contract. So to make a contract valid, you need four things. Four. Beginning date, ending date, consideration, which means money. Someone has to pay some money. Or consideration could be an apple pie. It could be a handshake. It could be an agreement for something else. Something of value. Consideration. That's what consideration is. Something of value. And then fourth, meeting of the minds. Basically an agreement. I agree to buy, you agree to sell. These are the terms. Okay, so four things. Beginning date, ending date, consideration, and meeting of the minds. All right. So a covered call, basically, that's what it is. If I buy a stock, I can sell it to someone else at a certain price by a certain date, collect the premium, be on my merry way, get 1% every single week. Works for me. All right, where are we? Okay, Krista, I hope that made sense. Eric wants to take a look at Schlumberger, SLB. Schlumberger, ooh, see that? Ooh. So I'm looking for five things first before we look at anything else. You ready? High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. Okay, here we are now. Now, the high of the year, 51. The bottom of the year, 31. Okay, that's a $20 difference. Okay, now, here's the bottom. You've heard it over and over and over again. You want to make money in the stock market? Buy low, sell high. Buy low, sell high. There you go. You can't get any lower than the low of the year, and that was just a couple of weeks ago. Well, let's zoom in because I like this chart. This one looks good. And as we progress forward, you will see, because we're going to dive in a little bit deeper and look at it a little bit more. Eric, now Eric, did you know that off the top of your head, or did you have to look it up? Okay, now I didn't look it up because to me that's cheating. It's like you either know it or you don't know it. But at our fingertips, we have all the information. But I like having the information in my head. Anyway, here we go. The current price is $35.69. So the closest strike price, that's what we're going to sell, the closest strike price is going to be either the $35.50 or the $36. Well, this week's $35.50, which has 2 days left, is going for $51. Well, if I do the $35.50, I'm losing 22 cents. So if I take 22 cents off of that, then I'm at 29. That's not quite 1% this week. Okay, usually on Thursdays, we usually don't do this week's because there's only 2 days left. But next week's 35.50 is 83. That's a definite yes. So I like the numbers. I like the chart from what I'm seeing so far. So I like this. I like this. Great. Now let's dive in a little bit deeper, take a closer look at the chart because every picture tells a story. High, low, was, is, what's the motion? Let's zoom in a little bit closer. The last 90 days. High, low, was, is. Look at the motion. Up, down, up, down, up, down. Now she's heading up. That is clear as day. But you want to know what's even clearer than that? The 30-day. Let's zoom into the 30-day. Okay, here's the 30-day. 30-day high, 30-day bottom. She drops down. Now she's escalating. 33 to 35, that's only $2. Okay, that's not that big of a move. That's not even 8% maybe. Okay, 8%. You got a lot more space to go up. Not a huge amount, but still enough to make it worthwhile. Because I'm only looking for 1%. Well, 1% on a $35 stock is only 35 cents. Could it do 35 cents? Well, yeah, it could. It could hit 36. Well, that's 1% right there. 36.50. Well, that's 2 or 3%. And then all the way up to the 37. Yeah, we got plenty of space. If I like Schlumberger, which I do, but you guys get to ask yourself that question. Do I like Schlumberger? Am I willing to buy it and hold on to it? Well, it's offering me the money that I'm looking for. Okay? And it does have nice dividends consistently. Who do we have over here? Gope Lucky, what's going on? Yeah, baby's in the house. How you doing, yeah, baby? All right, so let's do, this will be the first one we do tonight, Schlumberger. Let's take a look. Now, some of you who've been here throughout the week, we still have that 5 that we picked up on Monday. So we're going to take a look at that in a little bit, the 5 that we picked up. And we might take a peek at the 5 from last week. All right, so here we are. Let's get rid of this. Let's go to covered calls. Let's do the, not this week's, because not enough money there. The 35.50s right there. One contract. This is where the math, you know, that 8th grade math where you should have been paying attention in 8th grade. Remember that math? Algebra? I'll never use algebra. Yeah, you will. I'm only getting paid $20 an hour. I can't pay my bills. Well, how do you figure that out? Well, $20 an hour, 40 hours a week, plus the taxes, plus that's algebra. Okay? It is. You should have paid attention in math class. Now, I always tell people, anytime you are trading, now listen, this is for the newbies, the new people out here. If you're new here, listen closely. This is very important. Okay? Anytime you do a trade, before you hit this send button, read the order. Don't read it. Read it out loud so you hear it, not just see it. Hear it. Because everybody especially the beginners, hits the wrong button sometime, which means, okay, you may have full intention and everything may be perfectly set up and it looks like you can make a nice profit off of it, but if you hit that wrong button, that nice profit just quickly disappears very quickly. And I've been trading over 20 years, and yes, I hit the wrong button every once in a while. I did it this morning. I didn't lose anything this morning, but a couple of weeks ago, I think I lost $2,500 because I hit the wrong button. Anyway, let's progress. So for you newbies, go slow, read it out loud, listen carefully. This is how I read it. I itemize each section. I put, because it's all one big sentence. Okay, bunch of letters and numbers. But they make sense if you do them one section at a time. Okay, listen closely, see if it makes sense. Buy one, covered call, Schlumberger, 100, which is the weeklies. 20 June 25. That's next Friday. That means this option trade is going to expire next Friday in about 10 days. The 35.5 call option against the SLB stock, Schlumberger, at the market to open to open. Now, they're not repeating themselves. It's not a stutter. It's two orders, to open to open. What does it mean? Well, it means I'm buying the stock. That's one order. I'm selling the option. That's the second order. To open, one order. To open, second order. Now, there is a huge difference between those two orders. Because one order, I'm buying the stock. Well, that information goes sent to New York. That's where you buy your stocks, in Wall Street, New York. Okay? The options, well, those are traded in Chicago. Chicago Board of Option Exchange, the CBOE. Well, that's in Chicago. So, this order is going to go like this. New York, Chicago. Go, whoop. Okay. Now, why do I do it at the market and not a limit order? Well, let me explain the difference between a market order and a limit order. A market order is, give it to me now, I want it, I don't care what it is. That's a market order. I like those because they fill instantaneously. And I always use them when I'm entering a covered call. Not a stock, not an option, a covered call. And the reason why. A covered call has two orders in one. But the nice thing about two orders in one, the profit is already locked in. So remember earlier I said simple, safe, predictable? Well, I already know what my profit's going to be. Maximum profit on this trade. Most of the time when you buy a stock, you buy it and then you wait for it to move before you know what your profit's going to be. Well, with a covered call, well, I'm buying it at the market, which whatever it's at. Give it to me now, I want it now. And then I'm selling an option for them to buy it from me at a certain price, $35.50, by a certain date, 20 June 25. Okay, so remember the rules. Rule number one, never buy something you don't want to hold on to long term. I got no problem buying Schlumberger and holding on to it. Rule number two, never sell at a loss. Well, whatever it fills at, my assumption is going to be $35.29. I have no intention to ever sell for less than what I paid for it. And rule number, can you look into pie for me, please? Rick, the Wealth Coach. Okay, Rick, the Wealth Coach, how are you today? Uh-oh. Kevin is new. I can tell Kevin is new because, well, it's a simple, easy name. But I know he's new just based on what he just asked me to take a look at. Okay, and Kevin, I'm going to get to you in a minute, and I'll tell you why I isolated you like that and how I know that you're new. Anyway, so here's the order. And the reason, the difference between a market order and a limit order. Market order, give it to me now, I already know what it is. The profit is already mixed together. The stock and the options are already together. I already know what it's going to be before I even do it. Simple, safe, predictable. I know what it's going to be. Consistent. It's a weekly option. Okay? 13 June. Well, that's this Friday. 20 June. That's next Friday. 27 June. That's 3 Fridays away. Every single week, I can do a covered call on this. So look at it this way. Okay? let's say hypothetically speaking, I'm buying a business, Schlumberger. Okay, I'm buying 500 shares, or I'm buying a small store, Schlumberger. You know, two offices, storefront, window, bathroom in the back with all the trimmings. People come in, people buy stuff, and I get a profit every single week. I take it as a cash producing asset. I don't look at it as a stock that goes up, down, up, down, up, down, because once I buy it, I have no intention to sell it. But the fluctuation in the price, up, down, well, that tells me what my rate of return is going to be. So it's kind of like any retail store. If you think about it, any retail store, right? Let's say the Five and Dime, okay? Bill and Ted's Five and Dime, right there on Main Street, 123 Main Street. Small little store, cute little thing. Okay, well, how much money did we make this week? X amount. Well, because you know what you paid for it, okay? Whatever the price is, $35.69. We know what we paid for it. We know that we can do a covered call every week. Well, think of it this way. You paid for a store. Okay, that's how much you got it. That's how much you got invested into it. Great. Now, your employees. Well, you're the employee. You get in there and you do the trade. Okay, well, if I bought it for this is what I want to sell for. I want to collect this money. Great. What did you make this week? Wonderful. Did the value of your store increase or decrease? Yeah, it did. But what never changes is the price you paid, your original purchase price. The price you paid only changes if you dollar cost average. And we're not getting into that at this moment, but once you buy the stock, once you buy your store, once you buy your cash producing asset, we'll treat it like a cash producing asset. So if I have 500 shares, that allows me to do 5 contracts every single week. So every single week, well, one contract is $66. Okay, not huge. So 5 contracts would be $66 times 5. What is that? 900 and something to that effect. No, not that much. No, 300 something. No, whatever it is. You know what? Let's find out. What is it? Let's get the calculator out. So if I'm getting 66 per contract, and each contract is costing me $3,400, well, let's find out what the rate of return is. Now think about it. If it's a store, if it's a little store on Main Street, a little small thing, you and your wife, you and your significant other are the only employees. So you go in every day and you do your work. Well, that's what we do. We go in every morning and we see what the stock is doing. Where's it at? Because I know what I paid for it. What I don't know is, what is it going to be tomorrow? What is it going to be Friday? I don't know those. That's like when you're in business, you have no idea how much money you're going to make this week. You have no idea how much money you're going to make next week. Like a pizza parlor. They have no idea how much money they're going to make until it's done and over with. Well, that's what we're doing. Same thing. Stocks go up, great. Well, we sell a covered call, great. That's how much we made for this week. And then we do it again next week. All right, anyway, so let's do the math. Figure out how much this is. Clear that out of the way. Maximum profit, $66.50. Now, the way to find out the rate of return is to take the profit, maximum profit, $66.50, divided by the cost of the shares, or how much you're paying for your business, $35.84. So if I take $66.50 divided by $34.84, that'll give me my rate of return for this week. Then guess what? 2 things are possible. We're going to get that in a second. Hold on. Divided by $34.84. $34.84 gives me a grand total of 1.9%. That's a little bit shy of 2. What is this? This is SLB. 1.9. Okay. All right. Anyway, that's SLB. Do you now comes the interesting part. We've seen the numbers, we've seen the chart, everything looks happy. Now you have to ask yourself the question. 1.9. So how did that go? I must have hit it again. All right, let's get that out of there. Let's get that out of there. Let's get this out of there. Let's go back to where we were and back to there and back to here. Okay, so you got a couple of questions to ask yourself. Question number one, and this is the big one. Does this make sense? Concentrate on good quality companies. Buy them at a certain price at the right time. Because remember, you don't want to buy it when it's high, and you don't want to buy it at the bottom. Okay, stocks do two things and only two things. They go up and they go down. Well, 30 days ago, it was up here. 2 weeks later, it's down here. Now this week, it went back up again. Okay, so here is the bottom. I like to jump in at the bottom, 2 days to the upside. Okay, 1, 2. Then on the third day, that's where I want to jump in. Okay, so 1 day to the upside, 2 days to the upside. Here, Monday is where I would have jumped in on Schlumberger. Okay, because 30-day high, 30-day bottom. Now she's shooting up, 1 day up, 2 days up, 3 days up. As long as day number 3 to the upside is higher than the previous close. Okay, just by knowing that, well, that's when I jump in, I do the covered call, looking for the profit. Well, this one's 1.9% for 1 week. Well, 1.9% for 1 week was a little bit less than 100% in the year. Because 1% a week is about 52% a year. Now, that's simple interest. There's a difference between simple interest and compound interest. The name alone should tell you. Simple interest, well, that's easy to figure out. Compound interest, well, that's a compounded issue, and it's like you're compounding the problem. Yeah, compound interest can get a little complicated. But anyway, Schlumberger, cool beans. Next, oh, Mike, Mr. Mike. All right, hold on, Mike. I'm missing some things. All right, so we did that. Eric, thank you for that. Mikey G wants to take a look at LUV. Mikey G, LUV. Now, for those you don't know, LUV is Southwest Airlines. Now, go figure that out. How do they get LUV out of Southwest Airlines? There's no V in there anywhere. Southwest. Yeah, there is a U and there is an L, but there's no V in there. Anyway, besides the point. All right, so here we go. Southwest Airlines, LUV. High, a low. Where was it? Where is it? Look at this. It's all over the place. Down, up, down, up. Okay, this is going to be a no. Sorry. Now, Mikey G, the reason why it's going to be a no, take a look at this. Okay? Went from 26 up to 34. Okay, Mikey, you know I don't buy at the high. Just doesn't make any sense. Now, FPG. You want me to take a look at NVIDIA. Okay. NVDA. Nope. Wasn't that quick? Okay. I don't buy anything at the high of the year. Nothing. Nothing. No, nope. Ain't going to happen. I don't buy at the high of the year. Now, here might have been interesting. Here might have been interesting. But here, yeah, no thank you. Does SMC work? Smart Money Concepts. Now, I've never heard of SMC. Nope. Okay, FPG. See this? 20 June, 18 July, 19 September, 19 December. If you want to do monthly options, there's nothing wrong with it. But I never do them because the money just doesn't work. The numbers just don't work. The money's not there for me. I want 1% a week. You can't get 1% a week if you can only do the trade once a month. Sorry. Samson. Well, XTI did numbers today. Too bad there's no dividend. Yeah? Samson? Hope you're having a good day. Yeah, baby. Okay, yeah, baby. 3:30. I have no idea what that means. Okay. Bob Loblar. Bobby Law. Okay, interesting. Eric, good evening. Mike. Ooh, Mikey wants to take a look at Wells Fargo, WFC. No. Sorry, Mike. Take a look. Okay. Bottom, top. Now she's coming down. Simple. Now, you can spot that within 3 to 4 seconds. Now, WFC is on my list, and I trade it often. Just not this week, because you got your 30-day bottom, your 30-day top. Now she's coming down. Okay, now, in a week or two, let's write WFC down, and next week, we'll take a gander at it. WFC. All right, we'll take a look at it in a week. 1970, just got here. Rog, what's going on? David G, what's going on? Raymond, M-E-I. What the heck is M-E-I? M-E-I. M-E-I-O-U-R. Nope. Nope. Say, Raymond. Raymond, there's a reason why I always ask people politely. Rule number 1. Never buy something you don't understand. So I have no idea why you're asking me to take a look at MEI, because it's plain to see June, July, October, January, monthlies. I don't do monthlies. So when I say weekly options only, well, this is not a weekly optionable stock. That's a no. So Kelvin, not Kevin, Kelvin. Kelvin wants to take a look at Tesla, T-S-L-A. Now, Tesla doesn't have any dividends. So how do you know when it's the right time to buy Tesla? Other than watching the chart, how else? Considering there's 10,066 different companies, so why would I want to read it? And Tesla doesn't have dividends. So how do we know when they're profitable? And do they have a repeating pattern? Do they move consistently, predictably every single year? I don't know. Anyway, let's keep on going. Kathy Keller, how are you doing today? CBB, good evening. Rick, the Wealth Coach. You want me to look at PI, P-I? No. That was that quick, Rick? Okay. 20 June, 18 July, 17 October, 19 December. No, no, and no. So, there it is. Okay, Waste Man. Bro, let it go. Not quite sure what you mean by that, but okay. But he wants me to retire. Retire, bro. Dude, I am retired, but thank you for that. It's starting to. Krista, thank you for explaining the covered call. You're welcome, Krista. Oh, Krista. Now, you're a lady, so see if you understand it this way, okay? Now, I'm not insulting women in any way, shape, or form whatsoever, but see if this makes sense. It's kind of a comparison or a metaphor, so to speak. Now, you're a lady. I'm pretty sure either you've done this yourself or you know some of your girlfriends that have done this. So let's say, hypothetically speaking, you got a hot date this weekend, so you go out and you buy yourself a nice fancy dress and a nice pair of shoes and a hip, cool-looking pocketbook. But you leave the price tags on because you know Monday or Tuesday next week, you're going to take all that and return it and get your money back. The premium or the use that you get out of it is kind of considered as the, what do you call it? The consideration, the profit that you got out of it. And then you bring it back to the store, you get your money back. Now, that's called girl math. You buy something, you use it, you get your use out of it, take your Instagram pictures, okay, you send it to all your girlfriends, look, lovely, and then you take it back and you get all your money back. Same thing, girl math, okay? You have a product, you sell it or you use it or you get some return out of it. And then you turn around and you get all your money back. Jack Bauer, how are you today? All righty. All right, so I'm going to jump over here and read some of these questions. Did that make any sense? Why did I keep moving? Oh, yeah, I got to do that. Laurie Ramolina. Kenny Reed. Hey, buddy, are you in Australia? Nope. Irish Dan. Kenny Reed. I really want to do covered calls. I have a few stocks that I could do it with 100 plus shares. Absolutely, Kenny. Hitman Lopez. What's going on? Johnny Reed. Ming's Collections. Big O, what's going on? Club Med Tom, what's going on? Hey, James, could you show how to roll a covered call to another week? Oh, come on, Tom, you've been here long enough. Mikey G, you did that one today? Cool beans, Mikey G. Okay, so how do you roll? Now, Club Med Tom, you're here on TikTok. Are you sitting in front of your big screen TV or your computer so you get a better view of the screen? Here's Johnny. Here we go. I'm picking this account here. Let's pick this here. Let's get rid of this here. Oh, look at this. U.S. Steel is in the money. So let's. All right. You ready? Okay. Here it is right here. These are my open orders. Okay. Here is the stocks I currently have. So let's take a roll on U.S. Steel. Yep. It's right there already. Oh, there it is right there. Okay, anyway, so first thing you want to do, you want to take your cursor and bring it on top of whatever stock you're looking at, if you're using Thinkorswim. Now, other platforms do it differently. I'm just showing you how to do it on Thinkorswim. So here's the stocks I have. We're going to try to roll U.S. Steel. So I right-click on U.S. Steel, and then this little box opens up. The fourth one down, 1, 2, 3, 4, fourth one down is create a rolling order. Click on that, and there it is. Okay, and it pops up the order right here. Okay, and then you read the order, and then you can tweak it and you can change it. Okay. How many contracts do I have? Well, it already presets everything for you. All you have to do is agree to it or change a few things. So I'm going to buy back 13 June, which is this week's. I'm going to sell 20 June, which is next week. So in order to roll forward, I have to release the lien that is on the current stock, which would be 13 June 2538 call option. Okay, that is being blocked by that. So I have to release it, which means I have to buy it back. Well, when I buy it back, I then in turn want to sell another one. Next week, the week after, the week after. So I can do the 20th, which is next Friday. I can do the 27th, which is 2 Fridays away. I can do the 3rd of July. Holy cow. My son's birthday is the 4th of July. It's only like 3 weeks away. Uh-oh. Low power. I need some juice. Juice me up, buddy. All right, come on. Unplug. Juice me up, buddy. There we go. All right. So when you're rolling, you can change any of these. Now, let's change it to the 3rd of July. So I just click there. And when you click, everything changes. Well, right now, it's negative 30. Well, negative 30 means I have to pay to roll it forward. Well, I don't want to pay anything. Okay, so let's move it out further than that. 25 July is not being traded. 15 August, there we go. I can go all the way out to the 15th of August, pick up a 50-cent premium. But here's the thing. 15th of August, well, that's all of the rest of June, all of July, and part of August. That's like 8 or 9 weeks. So I'm losing 9%. Because if I'm getting 1% every week, I roll this thing out 9 weeks just so that I have a credit. Well, that doesn't work for me. Now, you can tweak it all you want. Change the numbers, change the dates, and then figure out what you want to do. But the U.S. Steel, and the reason why it looks like this on U.S. Steel, because U.S. Steel jumped so much from where I jumped in that I'm letting it go this week, so I have no intention on rolling my U.S. Steel forward. All right, let's get out of that. Get out of there. Let's go back to that account. All right, that being said, all right, let's keep on keeping on. Okay, so Club Med Tom, hope that worked out for you. USA Boxy. Well, good evening to you. Eric, you're welcome. No, I did it today. Now, Mikey G, hope it worked out for you. JT, what am I drinking? Okay, so JT, and this cup is lemon tea with honey for my throat, because I'm not used to talking so much. So my voice box gets all wonky by the end of the day. Ginger lemon tea with honey. All right, and over here, it's a cold drink. A warm drink to loosen up the vocal cords, and the cold drink because I'm thirsty. Isn't that weird? Anyway, that's just water, honey, and lemon. All right, but it's cold, so there's a difference between two. Ming's Collection. Laura, United Health. Isn't that UNH? UNH? UNH. United Health. All right, now, Laurie, or Laura. We have a bunch of Lauries and Lauras. Anyway, I don't do stocks over $250. Okay, this one's at 310. A couple of months ago, it was at 650. But had a big drop. Now made the bottom here at 250. So it goes from almost 700 down to 250. Now it's bouncing off of there and moving back up again. If you like Cardinal Health, which I don't, because I don't do stocks in that price. Because if I can make 1-2% per week on a $20 stock, well, why would I be looking at $600-700 stocks? Okay. Let's keep on going. Miss Christy Lee, Miss Christile, okay, whatever. What stock should I try? Okay, Ming, I can't tell you what to do, okay, but I can tell you what I'm doing. I do the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then for the fun of it, I throw in Warren Buffett's list. That's 5 lists. You can go to Google and say, Dividend Kings list 2025, Warren Buffett's list 2025, so on and so forth. Okay, what do we have here? What we have here is a failure to communicate. Is IRR a good measure of a return on a stock? You're going to have to let me know what IRR means. Okay. What am I sipping? Tea with lemon and honey. Okay, ginger, lemon, and honey. James, what do you think is going to happen with CBDCs, central bank digital currencies? You know what? The way it's going, it looks like we may end up with a digital currency. But here's the funny thing. Okay? Now, I don't know how many of you remember when they introduced the euro. Okay? The euro. Okay? Now, they introduced the euro and they got rid of all the other currencies. But Britain said, oh, hell no, we're not getting rid of our pound. So they still have their pound because they flat out refused to do the euro. Okay. Well, here's the thing. That the powers that be said, well, the United States, Canada, and South America, they're all going to do the Amero. And they actually printed out and they actually made some of these Ameros. But it got shot down. But eventually, they're going to introduce a U.S. digital currency. Now, whether or not we decide to do it is our choice. Let me give you a brief example, just for a second. Let's say, hypothetically speaking, you take a $50 bill. Now, we all know what a $50 bill looks like. Now, let's say you take a $50 bill and you go to the farm stand. Okay? The farm stand, Farmer Ted selling tomatoes. You go to the farm stand and you give Mr. Ted a $50 bill for the stuff you picked up. Well, great. Well, now Farmer Ted has that $50 bill and he can go and pay his landscaper. So he takes it, gives it to his landscaper. Now his landscaper has that $50 bill. Okay? The landscaper takes it and he brings it over to the carpenter and he pays his carpenter the $50 bill. Well, that $50 bill stays the exact same for each and every person who it transacts through. But let's take a look at it the other way. Okay? Let's say instead of that $50 bill, you charged it on your credit card. So how much did the barber get? The barber didn't get $50. He got $49 and change. Well, now he takes his $49 and change and he pays his landscaper. Well, the landscaper didn't get his $50. He got like $48 and change. So as it progresses, each and every person that you interact with takes a little slice of the pie. See, cash, it's cash all the time. Doesn't change. But credit cards or digital currency, it slowly gets eaten away. See, the $50 bill can go from one person to another, to another, to another, to another, to another, and will never ever lose any of its face value. It'd stay at $50. But if I take and I buy $50 worth of, I get a haircut at $50 from the barber. If I spend $50 at the barber's not getting that $50. Okay, he got $49.50 or $49.25, whatever it is, because the bank wants their fee. Well, instead of having $50, he now has to reach in his pocket to even it up to pay his landscaper. Now, does his landscaper get the $50? No. The landscaper gets 49 and change. Now, I'm going to change batteries again. Oh, that's not good. I got to get another cord. There we go. So, although I like the idea of cryptocurrency and I like the idea of a digital currency, me personally, I'm going to use all cash. Because when I go to Walmart and Home Depot or any of those stores, I refuse, flat out refuse to use those, what do you call those things? Self-checkout lines? Yeah. Next, they'll be having us loading the shelves when we go shopping. See, years ago, you go shopping and you'd hand your list to the grocery store and the dude at the grocery counter. And then he would go through the store and pick out all your stuff, put it in a bag and give it to you. Well, someone came up with the idea with a self-serve grocery store. So you went into the store and you picked out all your stuff. And then you gave it to the cashier and the cashier ring it all up. Well, now you go through all the stuff, you get all your stuff, and then you have to ring it all up. Well, next, you're going to go to the store and all these boxes are going to be there. You're going to have to put it on the shelves and then pick up your stuff and then pay for it and then carry it out. Yeah, I'm a little old school, okay? I refuse to do that. I was at Home Depot today. I stood in line. See, all the self-checkouts were all open. But there was like 5 people standing in line to get to the cashier. Yes, they used to pump your own gas too. Absolutely. All right. HY, Weeble. Do you know what the ticker symbol is for Weeble? Because I don't know it. Drazik, what's happening, brother? Just getting here? Cool beans. All right, so I'm going to go over to YouTube and see what kind of questions they have over there. All right. What you sipping? Oh, Felix. Felix, you're a little late, dude. We already looked at Pfizer today. Wait a minute. No, we didn't look at Pfizer today. We looked at something else. Look at Pfizer. PFE. Whoops. PFE. Oh, no. Wasn't that quick? No. Now, don't get me wrong. I love Pfizer. I really do. But take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the bottom here. Shot up. We're at a 30-day high. I never, ever, ever, ever buy at a 30-day high. Okay, what do you think? High, low, up, down, up. Well, not where I want to buy. Okay, the bottom was here. Okay, you should have jumped in here and took the ride. Sorry, Felix. All righty. So, Jeremy, that's my opinion on CBDCs. I don't like them. I have no intention whatsoever to use them. Now, I'm pretty sure you've seen Star Wars, right? Star Wars, there's a definite two-tier system. You got the Empire, okay? And then you have the Resistance, or the Rebels, or those that say, well, hell no, you're not telling me what to do. Well, I'm one of those people. I have no desire whatsoever for people to tell me what to do. If you tell me what I'm supposed to do, you tell me what I have to do, hell no. I hate that shit. I do. There's probably a lot of you in the audience too. It's like if they tell you you have to do something, kind of makes you want to do it the other way around. So, same thing. Now, I know that we're not going to get away from it, so I'm still going to use all cash and float between the two. Mystery coin, 7000X. Spike, I have no idea what that means. Felix. Let me ask you a question, Felix. Okay? Now, my assumption, Felix, because we've had 1, 2, 3 days to the upside, just an assumption. If you got a profit, you got two choices. Take the profit or roll the dice and let it go. Okay? But here's the thing, Felix. It's not a profit until you take it. Now, I have no idea what you bought, what you sold, so I have no idea whatsoever. But you did a Pfizer call, and it's in the money. So it means, hypothetically speaking, that you're already in a profit. Okay, so the scenario, the question would be, how much more profit do you want? And if you did roll it, if you roll it into next week, what are they offering you? Are they offering you 1% or more? That's another question you need to ask. And then again, Felix, keep in mind, if the bottom is here at 22, okay, 22, the bottom's here, and now we're at 24.50, well, that's like a 12% increase from here to here. So if we zoom into the 90 days, the 30 days, okay, here's your last 30 days ago. 30 days ago, we're at 22. Now we shot up, okay, right around 12%. That's a 12% increase. How long do you think it's going to continue to go before this profit taking? Because look at where it is. You have all this space. Okay? So I can't tell you what to do. But me personally, I would take a look at what are they offering me if I try to roll it forward into next week. Is that enough money to tie up whatever you have? Because see, the way it's going to be is that you have a certain amount of money tied up into your Pfizer. Okay? Now, if you get 1% every single week from your Pfizer, that's a 50% or more return per year. Well, that's great. Well, she jumped up nicely. Okay, fine. Profit taking is right around the corner, no matter how you look at it. Going from here up to there, yeah, they're going to take profits eventually. You don't know when it's going to be. It could be tomorrow, it could be Friday, it could be Monday, it could be Tuesday. Okay, but it's not a profit until you take it. So you have a certain amount of money tied up into this. If you roll it into next week and you don't get 1%, well, they call that lost opportunity costs. So if you let it go and find something else to jump into to get your 1% or more, well, then you're getting your 1%. But if Pfizer's not offering you 1% or more to roll it into next week, well, that's a decision you have to make. Do I want to take less than 1% or do I want to let it go? Are the t-shirts for sale? Yes, they are. As a matter of fact, we have a new Shopify store that has all, shirts, T-shirts, hats, mugs, all that kind of nice stuff. Now, I'm not one to push product. I'm not. Because you all know how it works. Okay? You like one of the shirts, you go to the shop and you just buy one. We're actually introducing a few more, but I'm not trying to sell anyone anything. So, yeah, I have some. And you will see me eventually, within the next couple of weeks, different shirts, different sayings. Okay, so they're kind of fun. Yeah. So anyway, the Shopify store is not linked to my website yet. I have no idea how to do that, so I have someone else do that one. That being said, over to YouTube. What do we have over here? Cecil, good evening. What's the best asset over the past 17 years? Mikkel, I don't know the answer to that one because I have no idea what it is you're looking for. Now, Cecil wants to take a look at Paramount. P-A-R-A. Nope. That was quick, wasn't it, Cecil? Check that out. Okay. 30-day bottom, 30-day top. Okay? Bottom, top. I sell at the top. I don't buy at the top. Okay, thanks. Mux Capital, IRR is internal rate of return. Okay, most people just call it ROI, rate of return. Okay, but I've never heard of anybody said IRR. I've never heard that one before. But internal rate of return or rate of return. Okay. Not the best return metrics for stocks. Now, Mux, I'm not 100% sure what you mean by that. I look for 1% every week. Now, granted, if I spent more time sitting in front of my computer, I probably could get more than 1%. Probably. Well, I'm pretty sure I could. But then I'm trading my time for money. So I have a mixed crowd here. Basically, the strategy that I'm using, the strategy I'm showing you is a cash flow strategy. Okay? It's not a capital appreciation. If you want to buy a stock and have it consistently go higher and higher and higher, well, you're in the wrong place. That's not what I'm looking for. There are plenty of people just like me doing basically the same thing. Some in Forex, some in crypto, some in, what's that other one? Fast contracts, some in futures. There's a lot of stuff you can trade. There's a lot of ways you can make money. Well, I've tried all of those. I haven't done crypto because it doesn't make any sense to me. Don't get me wrong, I love the idea of it. You know, get the money out of the fingers of the Federal Reserve. Get the fingers out, get the government's fingers out of my pockets. I love that idea. However, there's no product, there's no safety. It just bothers me. Jen, didn't we look at Wells Fargo already? WFC. We did, and it was a no. Okay, here's the bottom, here's the top. It's coming down at the moment. So WFC's a no. Sorry, Jen. So back over here. So, oh, you just joined? That's okay, Jen. Perfectly okay. I'm here every night. Ask whatever questions you like. But Jen, keep in mind, I'm looking for companies, I'm looking for companies that are consistently profitable for at least 2 decades and have weekly options. It just so happens that Wells Fargo fits that list. Okay, they've been in business for over 100 years. Alrighty then. All right, Rex Lexus. Okay. Mux, should I rely on the Sharpe ratio or IR? What is IR? It's not implied volatility. All right, anyway, as a measure of risk-adjusted return. Okay, good. Good evening. I may need to be off and on tonight. Well, good evening, Miss Lisa. Glad to see you here. Mux Capital. Rex, this is a show. This is not my room. We need to stick to the room subject and not disrupt the room. Good luck to you. Mux Capital, oh my God, I appreciate that immensely. Thank you for that. Crypto is like a commodity. Yep, I get it. But a commodity has intrinsic value. Crypto has the only value crypto has is an agreement between all of those that are using it. Okay? Unless, of course, the crypto is backed by gold or some kind of an asset, which I don't think they are. Okay? But, all right, let's keep on moving. Mohammed, how are you? Why you strong? Okay, thank you. Hi, James. Good to see you. Brian, thank you. Doing a good job, thank you. What about Netflix? NFLX? NFLX. I don't think I've ever bought it. And that's probably the reason why I've never bought it. If I say I don't buy anything over 250, I don't buy stocks over 250, what would make you think I would buy anything that's at 1200? Well, look at it. Seriously. Here's the high, and now it's coming back down again. Yeah, no, and no. What about Berkshire Hathaway? Okay. Destroy 5,000. Berkshire Hathaway doesn't have weekly options. It's an automatic no. So what do we have over on the other website? Oh, wow. A lot of questions over there. All right, here we go. Questions. Demetria, good evening. Barry, what about NVO? Uh-oh, you asked me about NVO earlier. NVO. Okay. Novo Nordisk. All right. I've never traded it before, but if we're looking at just the chart alone, the high, the low, now she's up. That's a nice bounce. Now, if you zoom in a little bit closer and look at the last 30 days, what do you think? Here's the 30-day bottom. Here's the 30-day top. And today, it's down. Yesterday was a 30-day high. Well, today's lower. Could that 64 to 80? Think about it. 64 to 80. That's a $16 increase. Okay? $16 increase on a $64 stock. What is that? That's over 20%. Okay? Because 64, 1% of 64 is 64. You multiply that by, or you divide that by the 16. Yeah, it's over 20%. 20% move, well, now it's going to pull back. What do we have here? I just got on. Demetria, thank you. Oh, what about high yield max ETS like Coney? Hair Escapes, how are you today? Well, now, Hair Escapes, when I say I don't buy anything unless it has 2 decades, now that's 20 years of consistent profitability. Coney's only about a year and a half old. No, it doesn't work. Jerry, what do you think about GAMF stock? I've never even heard of that one. Galway Metals. Okay. No options. So how am I supposed to make money on it if it has no weekly options? Remember rule number 4? Rule number 4, weekly options only. I got to get, you know what? I'm going to put right up there a little banner with the 5 rules, 5 criteria, 5 rules, simple, safe, predictable, consistent. Never buy something you don't understand. Never sell at a loss. Make sure the company's profitable. Weekly options only. Make sure the numbers work. So Coney hasn't been around long enough. Okay. Okay, Amazon. Oh, AZO, AutoZone. Isn't that one like way out there? Okay, all right. Now, if I wouldn't do Netflix at 1,200, what would make you think I'm going to do AutoZone at 3,600? Okay, O'Reilly. What's the ticker symbol for O'Reilly? What did I manufacture? I manufactured artificial coral reefs. Hold on a second, because a couple people wanted to see it. So let's see if I can bring it up. YouTube. Here we go. Got to go over to YouTube and actually find it. Might be a little challenging. Okay. Come on, videos. Here we go. Where are my videos? Those are old videos. The latest video. Oh, no, lives. No, the old lives. Come on, where are my old lives videos? The latest. Oh, come on. Look at that one. Holy shit. 2011. Uh-oh.
Don't let investors into this round, but not for long. StartEdge's
Hold on.
equity race is closing.
Morning, this is James. MoneyMakesLifeEasier.com.
That's a long time ago.
Sunny Sarasota, Florida. Today's September 1st, 2011. What's going on today? 38 companies are paying dividends between today and tomorrow.
2011. Holy cow, look how young I was.
Take advantage of that. What else? 50 companies doing the earnings reports between yesterday and today, and before the market, some after.
All right, that's not what I was looking for. Apparently, I can't find it. When I find it, I'll let you know. But basically, oh, nope, that's not it. I wanted to find that one right there. Where do I find my old? Where do you find old lives? Old wives. All right.
Use Best Choice software in accomplishing your goals. Now, making money.
Yeah, that's an old video. Holy cow. All right, let's not do that anymore. All right, so eventually I will find it. I will bring it up, show it to you. But until then, okay. All right, what did I manufacture? I manufactured artificial coral reefs. I think NVO is an annual dividend and probably not worth looking at. Thank you, Barry. Lemonade, good trading method. Do you have other trading styles also? Absolutely. This is the only one that I share here for free. Exactly. Bitcoin has no catalyst. Thank you. Eagle, thank you. Raw Cutlery, thank you. Joey V, what's your typical return monthly? Ooh, Joey V. Let's go here for a second, Joey V. I get way too many things open. Joey V, hold on one second. Now, here we go. All right, Joey V, you ready? I share 3 accounts publicly. I have 7. I have 7 accounts. I share 3 of them publicly. You ready, Joey? Account 1, account 2, account 3. 3.8. 0.8, 4.4, 4.2, 3.6, 3.1, 3.6, 1.1, 1.4, 1.3, 1.1, 2.0, 0.65, 1.9, 2.7, 1.4, 1.7, 3.9, 1.8, 3.3, 2.7, so on and so forth. So Joey, I do share all my trades and I do let you know what my rate of return is on a consistent basis. So as you've seen, I don't make 1% every single week, but for the most part, I do average over 1% every single week. So you've seen 2 of them where I didn't make 1%. That's okay, it happens sometimes. Mindy, good evening. Kevin, when trading options, what do you look for? Okay, so Kevin, I don't trade options. I trade stocks and I sell. Okay, so I'm basically doing a lot of covered calls where I buy a stock and I sell somebody the rights to buy it from me. Roland in the cemetery. I have no idea what that means. Please explain what weekly options are. Jen, how are you tonight? You have no idea what an option is? Okay. So Jen, let me explain to you briefly what an option is. Because see, the word itself, option, kind of gives you an idea of what it is. All right, so if I buy a stock, right? Let's say I buy Ford. Let's go take a look at Ford. Ford. Everybody knows who Ford is. All right, here's Ford right here. Okay, Jen, this is... Okay. All right, Miss Jen, this here is the Ford stock. Now, I'm hoping you understand what a chart is. Okay, this was back in April. She went up the middle of May, came back down in the beginning of June. Now she's starting to go back up again. Well, that's just the flow of the value of the stock. It goes up, it goes down, it goes up. Okay, so over here on this side, Miss Jen. Okay, all the numbers you see up here is all the information about the stock itself, the Ford stock. Okay. The last trade today, 1066. It opened up today at 1064. The high of the day was 1077, and the low of the day was 1061. This is just the information, okay? 93 million shares traded today. Now, that's just the Ford stock, okay? Now, you notice there's nothing else here, okay? What I'm going to do is I'm going to click on that right there. It's called the option chain. Now the option chain gives me information. Now what does it give me? Well, it gives me dates, it gives me numbers, and it gives me statistics. But basically, an option is if I buy Ford at the current price, right here, $10.66, that's the current price of the Ford stock itself, the stock. Now the option, that comes into play when, let's say, hypothetically, Jen, okay, let's say hypothetically you buy Ford at the current price, $10.66, and let's say I want to buy it from you, and you say to me, say, all right, I will let you buy it from me at $10.50, and you can pay me anytime between now and, you ready for this? The 13th of June. Well, that's Friday. Or the 20th of June. That's next Friday. Or the 27th of June. That's 3 Fridays away. So an option allows you to sell what you own at a certain price, which are called strike prices. Okay, you ready? 9.85, 10, 10.50, 11, 11.02, 11.50. They're already predetermined prices. Okay, so you would be entering a contract with me. Now, you own the stock. Remember, you paid for it at $10.66. And I want to buy it from you at $10.50. Well, for the privilege, because it's kind of like a privilege, to buy that stock from you for less than what you paid for it, I'm going to be paying you 26 cents a share. Okay? So ultimately, you're going to be selling it to me at $10.50 per share. You're losing 16 cents, But not really, because remember, I'm buying it from you and I'm paying you this here, $10.50 right here. I'm paying 26 cents a share. So if you take the 26 cents a share, add it to the 10.50, you're walking away with 10.76, which is more than what you paid for it. So your profit is already built in with that trade. Now let's say, hypothetically speaking, we agree that you bought it at 10.66, and I'm going to buy it from you at 11. The 11's right here. For that privilege, I'm going to pay you 4 cents a share. Okay, so I'm going to buy it from you anytime between now and the 20th of June, and I'm going to pay you $4 a share. So, hypothetically speaking, if the stock goes up to 20, I'm still buying it from you at 11, because the stock option allows me to buy it anytime I want between now and the expiration date. 13 June, 20 June, 27 June, 3 July, 11 July, 18 July, 25 July, 15 August, blah, 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 blah. It's selling the rights for someone, anyone, to buy at a certain price by a certain date. Now, weekly options, you can do it every single week. But there are some companies that only have, hold on a second, that only have monthly options. 20 June, 18 July, 19 September, 19 December, 16 January. So those are monthly options, which you can only do it once a month. So you got to decide. Do you want to get a cash flow on a weekly basis, or do you want to get cash flow on a monthly basis? That's why they're called options. This one, or you can do that one, or you can do this one. Which one do you want to do? Oh, what options do I have? Well, you got a whole bunch of them. Okay, Roland Warrior in the cemetery. I have no idea what that means. Mohammed, how do you guarantee the stocks with dividends will keep the same value? I don't ever remember saying I guarantee that. Never said that at all. Stocks go up, stocks go down. It's kind of like throwing a dart at a dartboard that's on a moving train while you're on a horse, blindfolded. Think about it. Okay, stocks go up, stocks go down. That's all they do all day long. Up, down, up, down, up, down, up, down. It's like a merry-go-round. And you're running around the merry-go-round and you're trying to jump on. Well, same thing. There is no guarantees in the stock market. There's only 3 guarantees, But that's not one of them. Scotty Cook, what's happening? All right, so let's keep reading some of these. Isn't Think or Swim a complicated platform? Well, Joey V, it is until you learn how to use it. Okay? Landscapers only accept cash. Okay, but do you understand the example that I was giving? Okay, so if you use cash, the value of the cash stays the exact same. Each set of hands it transfers to. But cryptocurrency and the CBDC, they don't. They lose value as they go from one person to the next. So that $50 bill, cash, can go through 10, 15, 20 different people, and it will always be value of $50. But $50 on a credit card, well, I'm paying $50. I'm getting my $50 worth. But the person receiving the $50 from me is not getting the $50. Okay, they're getting the $49 and whatever, minus whatever the fee is. Demetria, I'm so lost. I should start with the videos on YouTube where you were teaching your daughter. All right, Demetria, it's really not that difficult. Number 1, never buy something you don't understand. Simple. Stick to the good ones, okay? Dividend Kings, Dividend Aristocrats, Dividend Champions. Stick to those 3 right there, that 3 list. That will give you about 150 decent companies, Okay? Now, any one of them should be good because they're all good companies. And never buy unless it's the right time to buy. Because the chart will tell you what direction is it going and where it is. Like, take a look at this one here. Here's the high of the year. Here's the low of the year. Here's where it was a year ago, and here's where it is now. So if you just take your finger and trace it, up, down, up, down, up, down, up. Well, where's it going to go next? Well, by looking at it, by looking at the movement, not just the movement, the dollar value attached to the movement. Okay, so it went down, up, down, up, down. So right here is the bottom, 55. Now it's at 57. The distance between 55 and 57 is only $2.05, which is about 5%. So it's only a 5% move from here to here. Could it keep going up? Yeah, it could. But do you like that company? And that's always the big one. Do I like that company? Holy cow, it's at 11:30 already. Oh, wow. So let's keep on going some questions. What website do you use for charting? Well, Jen, it's not a website. This here is called Think or Swim. It's through Charles Schwab. Now, I don't get anything whatsoever telling you guys to use this. I had no kickbacks. My name's not Pelosi. I don't cheat. That's a terrible thing to say. Well, not that it's not true, but it's still a terrible thing to say. All right. Let's keep on going. What else do we have here? Melatonin wants to take a look at Hewlett Packard HPQ. Woohoo! Interesting. Okay, it wasn't a yes, it wasn't a no. It wasn't really quick, but take a look at the chart. High, low, is, look at the motion. Okay, down, up, down, up, down, up, down, up, down, up. Okay, the bottom of the year is right there. About a month ago, she went up, she came back down. Look at the gap, there's a gap right there. I love gaps. Gaps have a tendency to fill, which means we know eventually it's going to go up. So let's zoom. Excuse me. Before we zoom, holy cow, that was 3 in a row. All right, let's do this. The current price is 25. If I buy it tomorrow at 25, I can sell to someone else at 25 and then collect 37. Well, we all know that 37 is higher than 25. So let's do the math and see, is Hewlett Packard a good buy? Well, I'm pretty sure we all know who Hewlett Packard is and what they do. So let's do the math and see if it makes sense. Okay, a year ago, we're at 36.09. The high of the year was 39.89, and that was the end of November of last year. Well, we bottomed out on the 8th of April, which is the bottom right there. Now from there, she shoots up, pulls back, comes up again. So let's zoom in a little bit closer right there. Okay, here's our bottom right here, beginning of April. She shot up, pulled back, and she's going up again. You can see that it's going up. It bottomed out right there. Now it's going up. So let's zoom into the 30-day. See, I like going to the 1-year chart, and then I like doing the 90-day chart, and then I like the 30-day. Now, the 90-day chart gives me an idea what the momentum looks like. The 30-day chart gives me an idea of where is it going next. Okay? Here's your 30-day chart. 30 days ago, we're at 28. Okay, we jump up to 29.50, big drop all the way down to 23. That's a $6.50 drop. Now, it may not sound like a lot, but a $6.50 drop on a $29 stock is over 20%. Think about it. It's a 20% drop. So now we're at 23.50. Okay, so we jumped up to 25.50. It was only a $2 increase. Well, a $2 increase on a $23 stock is what, 8% maybe? So up. But what happened today? Today, it pulled back a little bit. Don't know. What does it mean to you? Could that right there be the high that pulls back? I don't know. We'll see tomorrow, won't we? All right, so let's do questions. How do you roll it into next week? Oh, mate laws. How you doing today? What else do we have over here? Okay. All right. Mate laws, rolling it into next week. Basically, you have to buy back the option you sold for this week and then sell an option either next week or the week after, to depend on how you want to roll it. But always look at the numbers. Before you do it, what do the numbers tell you? If you're going to roll it forward, well, you got to buy back this option. And then you sell the next option. Well, the difference between the two is your profit. Now, is that profit enough to satisfy your desires? Is it 1%, 2%, a half a percent? All right, let's go. Keep on keeping it on. Requested it last night, but fell asleep. I need a good coffee stock. All right, Benjamin. God bless you. You are amazing. Thank you, Daniel. I think you're doing great. Keep going. Praise Jesus. All right. Take a look at Lay's and Estee Lauder. Now, I don't know what the ticker symbol is for Lay's, but Estee Lauder's EL. And we don't have enough time to look at that. Terribly sorry. Because I usually end at 11:30. And I still have a whole bunch of questions to go through. Ashley, I started trading on Robinhood. I know nothing. Any suggestions? Well, Ashley, this is the first time you've been here. Ashley, I walk through extremely slowly and I explain one at a time. Now, I do use Robinhood. I also use Think or Swim, which is through Charles Schwab. Okay? I can't hold your hand tonight, but if you want to do it tomorrow night, come a little earlier, because I start at 9 and end at 11:30. Well, it's 11:27 now, so I got another 3-4 more minutes, but I always answer each and every individual question. So we got all the questions over there, all the questions here, all the questions here, almost all the questions here, all the questions. So I only have a couple dozen more questions to go. So if you got anything interesting, Ashley, you want to start, throw it out at me. Let's see what you got. Okay, take a look at Lay's and Estee Lauder. Okay, why is this so difficult? That's an interesting name. Okay, come to Saudi Arabia and discuss that. You know what? I get no problem whatsoever. I got my passport all ready to go. If you want to arrange, what's the name? Two-Faisal 4. If you want to arrange the flight, the accommodations, I'll do a seminar over there. No problem. Make the arrangements. Let me know. Hey, James, how's everything going? Matt, everything's going wonderful. Are your charts in reverse? Okay, Dive Bandit, you're here on YouTube. Now, YouTube doesn't offer me the ability to invert the camera. Okay? Now, a couple of the other platforms do allow me to invert the camera. So, yeah, you're looking at it and it looks all backwards. But the other channels don't look backwards. So it's a little challenging. Okay, Reginald, you missed out on a ton of money in the last 2 years had you bought the high. Okay, Reginald, I'm not 100% sure which stock you're talking about, but here's the thing, Reginald. I have no problems with the decisions that I make. Okay, I have Ashley, thanks. I'll try to tune in tomorrow. Ashley, I'm here every night. Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night. I take Friday night off and Saturday night off. Okay? But other than that, I'm here every night. 9 p.m. Eastern Standard Time to 11:30 p.m. Okay, so anyway, Reginald, I have no issues whatsoever about the trading strategy in which I use. Okay, so I've been trading for a very, very, very long time. Say I'm perfectly okay with 1% a week. At some point in time, Reginald, you will also retire. Okay? And then you will have to decide how to spend your time and your money. So for me, my balance in life, because there's a balance in life, light, dark, hot, cold, wet, dry, balance. There's balance everywhere. So how much time and effort do I want to put in as opposed to how much money I want to get out? So if I want more money out, I have to put more time in. Okay? There's a balance. So there are so many opportunities that come every single day. There's no way possible for anyone to get every single opportunity that comes up. Because I had an opportunity to buy Bitcoin, under $100 many years ago. I didn't like it then. I don't like it now. Okay? All right. Let's keep on keeping on. What else do we got? Dive Bandit. Trading is objectively simple. Am I right? Exactly. Just a simple system that works and repeat it over and over again. Exactly. Matt, when looking at a stock, what is the main thing on the chart to look at if you get what I mean? Okay, Matt, the main thing I'm looking for on a chart okay, you ready, Matt? The main, I look like Eddie Munster. The main thing I'm looking at on a chart is flow. Flow, okay? A year ago, here's the flow. Where's it going next? Okay? The flow, where's it going next? See? Basically sideways, down, and then up. Well, that's the flow. Okay? So step number 1 is pick a good company. That's step number 1. Step number 2 is put it into a calendar to tell you when is the right time to be looking at it. Because remember, there's 10,066 different companies. Now, each company that offers a dividend, well, maybe about 5,500. So you get 5,500 out of that 10,000 is going to offer a dividend. Well, the dividend, when are they paying it? Because when they're paying their dividend, the stock has a tendency to go up. So knowing that information, great. Well, how do I get that? Well, you pick your stocks, throw it into calendar. Then, first thing you want to do is take a look at the chart. What's the chart telling me? The chart's telling me she's in an upward trend for the next couple of weeks. That's what it's telling me right here. See it? A year ago, today. This is the 1-year chart. A year ago, today. Well, what's happening? Look. Sideways, down, up, down, up. It's really not that difficult. So the very first thing I'm looking for is the flow. Because once you see the flow, you say, all right, that looks good. Let's take a look at the numbers. Because the next thing you look at is the numbers. Does it make sense to buy it? Is there a possibility where I can make a quick profit? Now, my idea for a quick profit is 5 days. Get in on a Monday or a Tuesday, get out on a Friday, and then do the whole thing again next week. I'm retired. I have nothing else to do, so this is what I do. Okay, got a few more questions. Two-pack to chef. Thought it was Tony Hawk. Alrighty then. All right, Jamar, we'll take a look at Pepsi tomorrow. Do you look at crypto? Only stocks. Yeah, only stocks, because crypto has no intrinsic value to it. It's just an agreement between other users. What about Lucid? Okay, Juan, we'll take a look at Lucid tomorrow. You look like him a little. Yep, thank you. Just joining in, Soul Man, how you doing? Can you put back your glasses? Yep, there you go. The first purge. Hey, the first purge. I have 1,000 shares of AMC and exactly 100 shares of GME. How would you write contracts to make extra cash? Okay, well, Unfortunately, I don't like either one of those, but let's check it out. AMC. All right, here we go. AMC. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the flow. See the direction it's heading. Down, up, down, up, down, up, down, up, down, up, down. Well, it's at $3.29. How much money do you think you're going to make off of a $3.29 stock? Well, let's zoom in. Take this all the way over to here. Okay? So here's your high. Here's your low. Here's where it was. Here's where it is. So look. She dropped. Here's your bottom right there. She shot up. Now she's coming down. So it's coming down now. So personally, I'd do the 350s this week or the 3s. Okay? Because the 350s are giving you 2%. So you sell some. I would sell somebody the rights to buy AMC from me at either 3 or 350 and pick up these premiums. Because the 3 is at $3. The 350 is at 7. Okay? So 7 is 2% of 350. All right? So that's 2%. So imagine getting 2% every single week. Well, that's 100% a year. Anyway. And the other one, what was the other one? GME. Yeah, I would never buy that one in the first place. So GME, whoops. Okay, same thing. Look, down, up, down, up, down. So it's coming down like a freaking an opposite rock. What's the opposite of a rock? Like dropping like a rock. There we go. So 28.55. So, well, now that's gonna suck. Okay. Now this happens once in a while, and I'm going to apologize for you. Terribly sorry, dude. You ready? The last trade of the day today, 28.55. 28.55. Look at where it's at now. 25.30. The market maker is pushing it down. Anyway, two-pack. I know absolutely nothing about stocks. Just stop to tell you that a lot. Just tell you that. Have a good night. Well, Tupac, here's the thing. You actually do know more about the stock market than you think. Think about it. Seriously, think about it. You've heard of Ford. You've heard of General Motors. You've heard of General Electric, AT&T, Bank of America, Wells Fargo, Home Depot, Lowe's, maybe General Dynamics, maybe Dollar General. You've heard of most of those companies. So with the limited knowledge that you have, would it make sense to only buy something that you know? Well, the interesting thing about the ones I just named off, well, all of those are high quality stocks. Okay, Procter & Gamble, Home Depot, Lowe's, Johnson & Johnson, Clorox. Anyway, so if you only buy that what you know, okay, so let's say you do General Dynamics. All right, maybe you don't know General Dynamics. Dollar General. Okay, so let's say you do know Dollar General. All right, well, by looking at the chart, it's not that difficult to read. All right, because it reads left to right. Left to right. So on the far left is a year ago. On the far right is today. So just by looking at it, you can point out the 5 things in the chart. Where's the high? Well, it's easy. It's right there. Where's the low? Well, it's right there. Okay? Where was it a year ago? Okay, now remember, a year ago is all the way to the left. That's where it was a year ago. Where is it now? Well, it's right here. Okay? Now, the 5th thing, where is it going? What's the direction? Well, that's when you take your little finger like this and you go up, down, down, up, down, up. Or that's not difficult. So right there alone, you just did half the equation. So by looking at it, high of the year, the low of the year, where's it at now? It's right here. Does it make sense to you to buy it where it is? It's not at the high, it's not at the low. Other than that, then you take the next step, the understanding of, is it the right time to buy? So if you zoom in and take a look at the 30-day chart, because so the 1 year chart shows you the whole year. This one here shows you just this last month, the last 30 days. So in the last 30 days, it's the exact same thing, 5 things. The high, the low, where was it, where is it right now, and what's the direction? Well, up, down, down. It's not that difficult. So you do know something. You just don't, from what I'm seeing, you just don't know enough that makes you comfortable. Okay? But you do know some things. All right. All right, next. Matt, if you don't mind, I can't understand when a stock spikes. Can you explain what to look for before they spike up? Nope. Spikes happen during the day. Okay? You see this spike right here? This spike right here? You cannot tell on these days here. It's going to spike. You can't tell. Okay? On the morning of the 3rd, okay, that's when it spiked up. The morning of the 3rd, the market maker has some news or something happened between the 2nd and the 3rd. So perhaps on the 2nd, okay, perhaps, well, they got some information that may cause some kind of disruption in the stock market. And then the market maker says, you know what? I'm going to start it up here today. Nobody knows that's going to happen except for the market maker. Out of all the numbers you see, the opening price of the day, the high of the day, the low of the day, and the close of the day. Out of those 5 numbers, there's only one that is actually controlled by one person, and that's the market maker. The opening price of the day. Because you and I, we make the high of the day. Because we keep buying until we're done buying. The low of the day, well, we make that also. We keep selling until it keeps going down. So we control, or we create, the high, the low, and the close. That's what we create. The market maker controls the opening price. And when it's going to spike, there's no possible way to know. Jim Walsh, ROI, return on investment, absolutely. What about Tesla? No dividends, no thank you. Jim Walsh, investment on cryptocurrency is a posh way of gambling. Okay, Jim, thank you. What about hit and run Bros Road? Bros Limited, I have no idea. Moo Cow, good evening. Hi to you. Ever roll out during the week? Yes, I have. For a lower strike price to get more premium if the stock has drawdown? Absolutely. Brian, let's look at Johnson & Johnson. We're going to have to do that tomorrow because we're past 11:30. I'm just finishing up the rest of the questions for the day, and that'll be it. Thank you, David. I hate money. All right, Dave. All right, look at Apple. Brian, we can do that tomorrow. Hello. How about VVPR? We'll have to do that one tomorrow also. What about CELH? Celsius? Yeah, I don't think so. Celsius has not been around 20 years. Hello, sir. Do you mentor? Yes, I do. what stocks you hold. Way too many to list. I just wanted to say how much I appreciate what you do. Thank you, Miss Lisa. Do you roll positions for not losing stocks? Absolutely. And it's always going to be a numbers game. Okay, Alex. ATI. Eric, let's take a look at tomorrow. Do you trade options, futures, spot? Okay, Kyle, I trade stock options. No futures, no spot. Is more complicated than up, down, up, down? No, Kyle, it's not. Okay? Let me back it up for a second. All right, Kyle, let's go zoom in a little closer. All right, Kyle, what do you think? Look, up, down, up, down, up, down, up, down, up, down, up, down. Okay, it's actually that easy. Stocks go up, stocks go down. They do two things, and that's it. What we're trying to do, all of us here, we're trying to figure out, well, when it goes up and comes back down again, okay, the bottom, is when it comes down, it creates a bottom. At what point do we jump back in? I don't buy at the bottom. I wait 2 days for it to go up, 2 days the upside. On the third day, I will jump in and take it for the ride. It'll go up until it's done, and then I'll come back down again. And then we look 2 days to the upside, jump in, take that long run. Okay, it's not that difficult. Stocks only do two things. They go up and they go down. It's not that complicated. All right. Believe 3 and 1. Great energy tonight and very helpful explanations. Thank you for your time. You're welcome. Topic of discussion. Once the market opens, how does the algorithm kick in the day, and who is the market maker? Ooh, interesting question. Now, each and every stock, each and every company has its own market maker. Some companies have more than one market maker. Let's say Microsoft, for instance. They may have 4, 5, 6 different market makers. They may have 2. I don't know. And to become a market maker, well, it costs a lot of money to become a market maker. And you have to have some years of experience in doing it. The last time I checked was about a decade or 2 ago. The application fee, I think, was like $350,000 to apply to being a market maker. But the amount of money they make is freaking ridiculous. All right, let me back down here. That's market close for 1 hour. Kyle, that is market close for 1 hour. The market reopens, and that disparity is the trading orders that occurred during that closing hour. All right, thank you for that. Do you use an orb technique? No. Company, sir, in 1 hour structure bars, I wait for the retracement and mark the demand zone below 50% of the Fibonacci, and then take a trade in 5-minute time frame when chart crosses the resistance in the 3 exponential moving average. Okay, thank you for that. Topic of discussion. If I happen to know a market maker, it's a serious question. If I know a market maker, how can that help me? I'm not 100% sure if that's ethical, asking a market maker. Raymond, thank you for that. Okay, everything you said makes so much sense. You just earned a subscriber. Yay! Thanks, topic of discussion. Well, I appreciate that. I always love kind words. Kind words are nice. And that's it. That is all the questions. We are done with questions for the evening. That being said, somebody had to throw one in there. What about my strategy? Is it good? All right, company, let me explain something really simple. Okay? Now, in 2008, my daughter, 9 years old, she said, Daddy, what are you doing? Can you teach me? Okay? Simple, right? Daddy, can you teach me? 9-year-old little girl wanted to learn how to trade stocks. Most adults don't get it. Most adults make it complicated as hell when it doesn't need to be. Okay, so that being said, the trading strategy I am giving away for free, okay, I'm not asking anybody any money for it, I'm just, sharing the wealth, so to speak. It had to be simple, safe, predictable, consistent, and no way for my 9-year-old daughter to lose. Okay, so the criteria, that was the criteria. Now we get the 5 rules. Rule number 1, never buy something that doesn't make sense and you don't want to hold on to. If you don't understand it, don't buy it. It's that simple. Rule number 2, never sell at a loss. Well, that's pretty plain and simple, right? Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure the numbers work. Now, all of that had to be bundled into an explanation understandable to a 9-year-old that can be all accomplished within 10 minutes. That's where the phrase, the 10-minute trader, came from. Because she's 9 years old, how do you teach a 9-year-old? Okay? How do you teach a 9-year-old? Number 1. And how do you keep her interested? Now, if I'm going to teach her about the Fibonacci, well, that's not simple at all. Okay, the exponential moving average, that's not simple at all either. So everything you said, yeah, that's great, that's awesome. It sounds like it's going to work for you. But how do you explain that to a 9-year-old? Okay, so the strategy for my 9-year-old is the one that I give away for free, and it just so happens to work. Simple. What's the stock doing? Is it a good company? What is the covered call premium return going to be? Is it 1%? Yes or no? Well, 1% every week is 50% per year. Less than 10 minutes a day. So less than 10 minutes a day, a very simple strategy created for a 9-year-old makes about 50% per year. And I think that's pretty good. So you need to ask yourself the question, if a 9-year-old can average 5% per month, why is it that adults have a tendency to make things so complicated? Now, what you said, yeah, it works, more than likely, because I understood everything you said, but it's not simple. And it's not something you can do in 5 or 10 minutes. Because to, figure out the Fibonacci numbers and figuring out the exponential moving average and all that kind of nice, fun stuff, it's going to take a little bit more time. But this here, high, low, is, what's the direction? Up, down. Well, that's easy. That's for a 9-year-old. 9-year-olds, simple. Okay, so I hope that made sense. Thank you. You're welcome, Brian. How can we find out about your membership cost? Ooh, in the bio. Okay, now I try not to sell anything to anyone unless somebody asks. Okay, so Rustin, you asked. Oh, the Russian. Как дела? Пожалуйста? Спасибо? No? Anyway, in the bio, we'll have links to my website. And as soon as you land on the website, right smack dab in front of you would be, hold on, home on the range. There it is right there. Okay? The 10-minute trader. Now, I very, very, very rarely ever end with a sales pitch, but somebody asked, and that's the only reason why I'm doing this. So I say, for those of you who are here every single night, you know that I don't do this unless somebody asks. Okay, so on the website, the10minutetrader.com, right there. Okay? And that will take you to the books. And if you actually read it, look at that. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. Okay, come down here, about us. If you're looking to strike it rich overnight, this ain't it. My focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. And then a little video which explains the whole trading strategy. And you go down a little further, it comes down to more links, more stuff. You can even download the simple strategy book. I think it's like 2 pages, PDF. And this is just an example of some of the trades that we do. And this is what some of the clients have said, blah, blah, blah. And this is how you get in touch with me, right there, blah, blah, blah. That's about it. And you can put your email in there and I can contact you that way. So normally I don't do this. Okay, I just share the information. I only do it when somebody asks. So hope I don't insult anyone in any way, shape, or form. DraftKings. If I had $100, what crypto should I put it in right now? Can't answer that question. I don't do that. All right, topic of discussion. In my time of knowing about markets, I didn't know there was such a thing as a market maker. Incredible. You learn something new every day. James, when our side of the world market is closed and the other side of the world, the market is open for business, when they close down and we open, the market maker in contact with the other side of the world, market maker. Oh, no. See, the market maker is specific to a company. Okay, so let's say Home Depot has a market maker and Lowe's has a market maker. They're not the same person. Okay, it's a person that goes in and understands everything about that company and can blurt out verbatim of what's going on in the company. They know quite a bit. So it's not that easy to become a market maker, but it's very profitable. I bought some shares on Procter & Gamble. Silas, cool beans. Yeah, market maker. Yeah, okay. So when you buy a stock, hold on a second. Let's go back here. You're going to love this. Are you ready? Okay, watch this. Dollar General. Okay, right there. All right. Now, market maker. Pay attention closely. Do you see this right here? Bid, ask. Okay, look at it this way. Market maker. Okay? Now, there's a corner store right around the street from you. Circle K, 7-Eleven, Quick Stop, Quickie Mart, whatever. Okay? There's a store right around the corner. Somebody owns that store. That's the market maker. Okay? He's the owner of the store. Now, the market maker will buy milk from the farmer at $3 a gallon. The market maker will sell you a gallon of milk for $3.50. The market maker makes the difference between the purchasing the milk from the farmer, which you can't do, and then he sells it to you at $3.50. So he makes 50 cents per gallon that he sells. Well, it's the same thing with the stock market. The market maker buys from you and me. So when we want to sell, we can only sell to the market maker. You cannot sell me your stocks unless you actually have the paper certificates, which most people don't. Okay, so you can't sell me your stocks. You have to sell them to the market maker. Okay? 110.05. 110.60. So there is a 55 cent, it's called a spread, 55 cent spread. So you know what's really cool? Watch this. We're going to bring up the calculator. Okay, clear that. Now, 110.05, 110.60. The spread is 55 cents. All right? So we're going to put 55 cents. And then the market maker makes 55 cents for every share that's traded. Well, how many shares traded today? 2.69 million. So let's take 2.7 million. Okay, we take 55 multiplied by 2, 6, 9, 3, 8, 3, 2. That's how many shares traded today. That's just today. Okay, right there, the volume. So let's see how much money the market maker made today. Okay? So, so the market maker for Dollar General made say $1.4 million today. That's just the market maker. Of course, he's got to share it with. There's probably more than one market maker for Dollar General because it's a big place. But the funny thing is, how do you become the market maker? Well, Jay Love, 20 years ago, 20 years ago, it was $350,000 just for the application. Do you really want to? And then you actually have to be a floor trader for a certain period of time. So it's a very difficult position to get into, but it's very profitable if that's what I want to do. Okay. Oh, thank you. Man, that's crazy. Yeah, well, that's nothing. Okay. You take a look at every single company. They have volume, and then the distance between the bid and the ask. Now it's after hours. The bid and the ask, it's usually be 1 penny to 3 pennies. This is a little exaggerated. Okay, but during market hours, the difference between the bid and the ask is called the spread. Okay, the bid and the ask. It's like when you go to the gas station. Okay, the gas station, the owner who owns the gas station, well, they pay whatever they pay for the gas, and then they sell it to you at a higher price. So they make maybe 5-10 cents per gallon. Well, how many people going through that store, that gas station, how many gallons do they sell in a day? That's the market maker. He's the one. Anyway, besides the point. So I'm going to call it, it's 12 o'clock. I came across this scrolling, make 100 a day cash. What percent should I invest and where should I put it? Or do you have a system you're selling or something I can check out? Okay, DraftKings, of course I have stuff I'm selling, but I'm not selling anything. Okay? So you can go into the bio and look at all the stuff I have. Now, I try not to sell anything unless somebody asks me. And what you said, I just came across this scrolling, make $100 a day cash. Now, I'm not quite sure, that doesn't even sound legit, but, it is what it is. I don't pay attention to that kind of stuff. All right, so that's all the questions. It's 12:02. You guys have a great night, and we'll see you all again tomorrow. Because we all know, are you ready for this? We all know that one more question. James, go get some rest, because next time you're live, I'll be ready for more info and all your golden nuggets. Oh, bloody rocky this out. You have a bloody jolly good day. All right, so, good night, everybody over here. Good night. Ooh. How about Sha-na-na? You ready? Good night, sweetheart. Well, it's time to go. Bo-bo-bo-bo-bo. Good night, sweetheart. Well, it's time to go. I hate to leave you, but I really must say, well, good night, sweetheart. Good night. Do. Anyway, guys, have a great night. We'll see you again tomorrow. I love ya. Tomorrow, you're always a day away. Oh, down here. Sorry about